Hi there, Serial Trader here. I just want to have a quick look at Bitcoin as I think there might be a pattern at hand that's worth looking at as far as a position. Now, big picture, since my last Bitcoin update video, nothing's really changed. I think we're still stuck in this larger corrective period, although I think we're getting closer to the end of it. But in the meantime, I think that there is a triangle here. Now, I'm kind of thinking it's a triangle fourth wave, and we're going to thrust down one more time to flush out, maybe towards the lows of the range, 29, 30K, maybe spike a little bit below that, go a little deeper into the 20s. That's possible. Although I certainly wouldn't count on it. This triangle could certainly resolve to the upside as well. But the idea of the triangle is that you have a contraction in this range, a reduction in volatility, and it gets to a point, and then it explodes back, either up or down, and you have an expansion of the range, an expansion of volatility, and all that. So typically, since we have a triangle, the preceding move before the triangle was down, so that favors the triangle breaking out to the downside, kind of a continuation move. Again, not an assurance there. So let's just focus on the triangle itself and nothing else, not the overall wave count or anything, because I don't think that's relevant to what I'm trying to present here. So, okay, we could have just a simple A, B, C, D, and is that E? Or is E gonna, one more little spike up for E here? That's certainly a viable way of looking at this triangle. Okay, and that would indicate a thrust to the downside, and then after that, find a bottom, big reversal, maybe start our new bull run. That's kind of what I'm leaning on. But you could also have this, okay, where you have a triangle B within a larger correction. So you just have an A up, and then we'd be doing the triangle B, and then I'll get to what I'm trying to show here. So yes, we have a three-way move up for wave A, but then we just have a A, B, C, D, E, A, B, C, D, E. So that could be a triangle B wave. And then we thrust up in C, okay, for a larger corrective move, and then maybe turn down after that. So that's why you don't want to be too confident about trying to choose the direction of the triangle. And of course, this triangle could even still go on a little longer, even in this B wave scenario, and then thrust up in C. Although I happen to think that the triangle is probably almost done, and it's probably going to thrust down. So given those two scenarios I presented, what kind of trade can you construct around this? Well, you could buy a straddle. Okay, so now, for the longest time, there wasn't really, at least in my opinion, a good way to do options trading in regards to Bitcoin, but now I believe there is. So I looked around, and BITO is this ProShares Bitcoin Strategy ETF, and I believe it's just a futures-based ETF. So if you were to hold this BITO for like a year, it might deviate by about 10% from the actual price of Bitcoin, because there's rollover costs associated with futures contracts. But I mean, 10% a year on a entity that can move hundreds of percent a year, it's not a really big deal, even just for holding it. But as far as trading it, it basically doesn't mean anything. It's irrelevant, especially on shorter term trades. So it's a very, very accurate Bitcoin proxy, BITO, and it has an options chain. But before I get to the options chain, just let me get to what I was thinking here. So if we are going to thrust to the downside, we'll be looking at typical range expansion targets. So that'd be 1.382 and 2. So that'll get us to between 13 or around 18. I happen to think maybe around 18, because I think on Bitcoin that would correlate, let's see here, to roughly 28K or so. All right. But But okay, if we were to go the 1618 expansion, that would get us around 25K. Okay, well actually let's go with that, 1.618, because that would be around where I would expect this to be going. And let me get to why I think that if we do thrust down. But if we put on these average true range channels on the monthly chart on Bitcoin, okay, oh, hang on. You can see back in this prior correction in 2018, we got down to the -1 monthly ATR. And then once again on that spike down in March of 2020, hit right around that -1 monthly ATR. So if we are going to have one more move down here to finish this corrective pattern we've been in since April of 2021, if we get down to the -1 monthly ATR again, that currently would be right around that 25,000 mark. So let's just use that as kind of our downside potential. Okay. I'll get off the Bitcoin chart, of course, go back to BITO. So that would be the 1.618 here on BITO equivalent. So that'd be around 16 on BITO. Okay. So we're currently at 26, almost 2650. Be looking to get down as low as 16, let's say. Okay. So let's go over to Thinkorswim. And I think this, if this is going to play out, I think it's going to happen fairly soon. Because once the triangle gets going, it takes way less time for the move out of the triangle than the actual triangle itself. Like usually 1/3 the amount of time or something like that. So I think we go to the April 22nd, 2022 option contracts. Now keep in mind there are other Bitcoin futures-based ETFs, but this one is by far the most liquid and has the best option spreads and volume and all that. So that's why I wanted BITO. Anyway, so right now we're around 2650. So you could do the 2650 straddle, okay? And right now that would cost you around 450 or so. And really, if you look at the chart, hang on. If you look at the chart, 450, that would be greatly exceed if we went down to 16, or even if we go thrust to the upside. Let's do that. You would easily exceed 450 on an upside thrust as well. So basically, it wouldn't matter which direction it went if you bought the straddle, as long as it went more than $4.50 at expiration. Of course, if it happens before expiration, all the better, because you still have some premium that you could capitalize on as well. But if it just simply relies on intrinsic value, as long as we move more than 450 in either direction on or before April 22nd, the straddle could be profitable. So I think that's a pretty high potential, so high probability of success kind of trade. And really the risk, the idea that we would close right on 2650 on April 22nd is pretty low. So the chance of realizing the maximum risk is actually quite low on the straddle as well. But that's just the idea there behind the straddle. Now another thing, one that I've actually done. So okay, here's my rationale for this. So I'm already long a bunch of Bitcoin. Okay, so I don't care as much about getting a bullish trade on Bitcoin, since I'm already positionally quite long on it. So what I might want to think about more instead is downside protection, or at least taking the sting out of a downside move and then using the proceeds to get even more long at more attractive levels. That's what I'm thinking there. So with that idea, again, on BITO, we're thinking 16 as our kind of a downside potential if we thrust down. So let's go over to Thinkorswim with that 16 level in mind as a strike price we'd want to sell puts against, right? Okay, we'll go to the well, we could even make it the May, give ourselves a little more time here just as an example. Again, you can play with the expiration dates all you like. This is just for kind of a demonstration purpose. So I don't know, we could do a butterfly like this. We could buy the 20 strike as our long. So let's do that. Butterfly. And okay, we're going to buy the 20s, sell the 16s, and maybe buy the, oh, I don't know, maybe buy the 12s just to cap off the theoretical risk here on the position. And okay, you know, if we do this 10 long, 20 short, 10 long, that'd be, you know, like $377 debit. And, you know, that'd be your max risk. And then max profit is 36.80. So basically like a 10 to 1 profit versus risk, or risk reward ratio. I think that's on a theoretical basis. Like, it cannot get worse. Your loss cannot exceed the debit in this position, since we have a long 20, short 16, long 12. So overall, we're long 20 and we're short 20, but the long 10 at 20 and long 10 at 12. So different strikes there. So let's just look at the risk profile of that position as an example. Let me shrink this down. So it would look something like this. So basically, you know, at or above the 20 strike, we only have the small risk of the initial debit of the position. If, you know, if it thrusts up, it's just basically a scratch trade. Now, if we do come down here, which would be the equivalent of around 25K on Bitcoin, you can see we have quite a sweet spot here at that 16 strike. Even before expiration, this would certainly work if you closed it early, although it would work better the closer to expiration it gets closed. This kind of profit sweet spot. And then you have a fairly large range between 20 and around 12, where you can still have some sort of a profit. In fact, the actual defined levels are below 1960 and above, let's say, 1240. That's your actual profit zone. So a pretty interesting position to look at. Something I'll be looking at next week, to basically have something there in place in case we do thrust down and take out the you know, big lows on the longer term Bitcoin chart, you know, below 2930K, those lows, and we going down in the mid 20s. Something like this would certainly take the sting out of that. Or even, let's just say you're not even long Bitcoin at all, you don't care. That would still be a pretty attractive, you know, downside trade setup, regardless of what your existing position is. But for me, I think of this more of like a nice little hedge, or just something to take the sting out of a move down should it occur, with the idea that I just want to get more long Bitcoin for that larger move up that I believe, very much believe, is still coming to over 100K eventually. All right. Well, that's probably all I really wanted to mention here. Just BITO and the viable options trades you can now do in relation to Bitcoin with it. So that's probably good. Serial Trader signing off.